Hi folks, welcome back. Hope you are doing well. Today we have a lecture 14 of ICT A to Z beginner series. I am going to give you introduction on ICT 22 model. Okay. So before you watch this video, make sure you watch all this video in this series. I already make a playlist on ICT A to Z beginner series, and if you want to watch Hindi or Urdu channel on same series, I will put link in the description and the name of A Quick Money. Okay, so let's jump into the video. So in ICT 2022 model, this is the most important point and not limited. When I am going to show you the examples, okay, you will also learn what I'm exactly telling you. The first thing, we need a daily buys. We have to understand where the price most likely to go. Okay, so in that daily buys, we have to trade only kill zone hours. We have only trade 8:30 to 12 a.m. This is our entry area. Okay, and the second entry area time 1:30 to 4 p.m. Okay, so this is the New York kill zone hour. Make sure your time frame always on a New York session. Okay, we only took a trade once price tap on any sort of POI like order block, breaker block, mitigation block, fair value gap, inversion fair value gap, weekly gap, etc. Okay, once price tap on POI or on your any high time frame, okay, then we wait for a state of change in the state of delivery, or you can call it a market structure shift. Okay, and on that market structure shift, if we found a fair value gap, only fair value gap, now we will not see any of these another thing, only fair value gap. Okay, because ICT 2022 model only based on a fair value gap. So once the fair value gap occur, you will take the trade on that fair value gap, put your stop loss on the below of the origin of a fair value gap, and hit the target another side liquidity. If we don't find any of this scenario in kill zone hours, anything is not in the line, we are not going to trade on that specific day. All right, okay. So the slowly I will explain in the next coming examples. I will also add many things on this model like ICT do. Okay, he didn't explain anything in the one video, he explained in many videos, so might be the examples of ICT 2022 model is going to be more. Okay, so bear with me and watch. It will be really mind-blowing and change your life. Okay, we are in a 15-minute time frame on standard 15-minute time frame. Previous day what happened, price came. If we go to the daily time frame, we are a bullish. Okay, we have a fair value gap here in a daily. Okay, price came and gave a reaction. Okay, go to upside. Once like this happened, he took out this liquidity. Okay, we have liquidity here, we have a liquidity here and here as well. Okay, so what happened, we anticipate that today the price will be a bullish. Once we anticipate the price will be bullish, now what we have to do, we have to wait for price to come in our kill zone hours and give us a good reaction on it. Okay, so price, what happened, price took out the liquidity. Okay, you see price did not displace below of a previous swing point. Okay, then you have to mark out your 8:30 time frame, this. Okay, 8:30 can be your entry point, but 8:30 is a news driver time, so we avoid mostly that time. Okay, so 8:30 time I mark out, and then our entry should not after 12 or during 12. Okay, our entry between 8:30 to 12 o'clock. Okay, so what happened here, we took the liquidity here. This is the sell side liquidity we took. Now we market structure shift with displacement, as you seen here. Buy also here, buy also here. Okay. Market structure shift displacement. Okay. We are in a fair value gap. On which fair value gap? A daily fair value gap. Bias is bullish. Okay. So we come to our dead fair value gap, a huge fair value gap. So what we will do in that type of scenario, because this is a news driver, right? So we have to mark a midpoint, a 50% of that fair value gap, and we took trade on that. Once we are going to take the trade, we put our stop loss where the origin of fair value gap, first, second and third candle. Okay, so the first candle is the black one, we put here and target the opposite side a liquidity. Okay, the external range. Price come to the internal range, now going to the external range. This is the liquidity that has been triggered, and you see like that. Okay, so in ICT 2022 model, you have to only trade in a kill zone hours with a specific scenario. Okay, if this thing is not happen, you will not going to take a trade on that day. That's all. If you don't find any setup, you have to wait for a more price action every day. Okay, that's all. Let's I will show you the previous day example as well. So the Wednesday, yes, let me open so I will understand where is the this. Okay, this is our New York session. Here is the 8 o'clock we're open, but we only wait for 8:30. Okay, so this is the 9:30 candle. The price was choppy. Okay, bias that time was a bearish. You see market structure shift here, breakup structure here as well, and here price took the sweep in the liquidity. Okay, 9:45. Once it take out, then what happened? Price go upside, give you a structure. Okay, here also, but price did not give you any good setup here because the side is bearish. One thing more important you have to note on your notes. Okay, if price is bullish, you only take trade bullish. You have to wait that price give you a bullish scenario. Like here he confuse you. We are a bearish. Okay, we are going downside to the fair value gap to fill the fair value gap of on daily time frame. So what happened? Price give you a bullish scenario. You can take a counter trend on it. It's not bad. Okay, but the ICT model said only you have to wait for your setup. Like price go upside, took out the liquidity. Okay, then it's a market structure shift. If you go to 5 minute, 1 minute, 4 minute, 3 minute, 2 minute, 1 minute, like this. Okay, and then you have to wait for that setup. Like here. Liquidity taken. Okay, that's was the liquidity that taken out here, right? Market structure shift here. Okay, right? Here come price on the fair value gap, but we don't have these nearby this. You see, if you're going to take this trade, you have a huge stop loss because of the fair value gap, or you can put also here as well. Okay, the opposite side of the liquidity, 1.5 hour. This is the swing point. Market structure shift here is not displacement candle. This is not here. Okay, did you find any fair value gap here? No. So why you will take trade on this? You have to wait for what? A setup. In which time frame? Second time frame. What second time frame? PM session. See, shift displacement, we have a fair value gap here, first one. Okay, we have a second one. Okay, and we have a liquidity. At what time? It's tap 3:30, 3 o'clock. What are our kill zone hours? I told you on PM session 1:30 to 4 PM. That price tap and give you a reaction here, the closing of the day. Understand? That's all. These algorithms run on a time, and if this thing happen, you will take a trade. If not happen, you will not take a trade. Okay, I will explain you in more examples in the coming videos, so don't worry. Okay, so just practice on it. That first thing, the most important thing, you need a bias, a daily bias. After daily bias, you have to wait for kill zone hours, price tap on some sort of POI, order block, fair value gap inversion on a daily, on your higher time frame. It can be your 1 hour, it can be your daily, it can be your 15 minute if you are using 1 minute. Okay, then you wait for market structure shift, fair value gap, entry, target, another side liquidity. 1 to 2 risk or reward. That's all. Okay, I hope you learned something from this video. I will explain you more in the coming examples. Okay, so until next time, be safe.